Good morning, everybody. Welcome back to a Chart Nerd technical analysis video. Today we will be discussing VANRY. The ticker is VANRY against USDT on the weekly time frame. So let's give a quick recap. So since December of 23, we had this sort of ascending triangle where we was caught between a level of resistance and support. We was building up this higher level of support over time. And then coming into February, we actually broke out and put in this really impulsive move up to our current all-time high, which sits at 38 cents. Now, I think this was about a 5. Once we broke this resistance, it was roughly a 5x move over the space of 4 to 5 weeks. Now, when you do move this vertical and this quickly over the space of a couple of months, you do tend to see corrections coming in or coming back down just as fast. But what these can provide when you come back and you see corrective structure coming back down to key levels of demand / support, it can provide optimal opportunity. So right now, the fact that we have had this really impulsive move in the past and now we've come back for this correction, I think this demand / support zone is a key area where we've had this wick of last week on the 5th of August. We had a wick back down to 0.067, and I think these sort of areas, if we ever see in the future another retest of this demand zone, I think will offer optimal opportunity to get involved. And fair play if you did catch this wick low, because all you've done is we had this previous level of resistance, we melted out of it, came up too quickly, really vertical, and now we've just corrected all the way back down to retest this previous resistance / demand zone as support. Now, these wicks do tend to get filled in, so I'm not saying that this is 100% guaranteed the low, because we could come back sometime near the future and retest this demand zone for some sort of double bottom or a higher low, and there are a few signs that may give this away. So right now what I'm looking for is the fact that because we've lost these previous weekly low support in July, we ran into resistance at 14 cents on the 22nd of July, and then we've come down and lost this previous support. The fact that we've lost that support, I think that if we do see continuation, then we're looking to run back into this area as resistance. And this is where it might give the game away if we do run up to, say, 10 cents in the next week or coming days. At that point, I would expect resistance and pulling back for some sort of higher low to this wick. And if we can hold a higher low and sort of build up some sort of ascending base, just like we did here, we had this low in December, we had this higher low, and then we broke out. If we can put this low in on this wick, come back for some sort of higher low, and then look for the breakout up to higher levels of resistance, it would be fantastic. So I think right now, looking at the weekly time frame, the fact that we've wicked off of this demand zone, it does look like we could be pushing back up to our key level of previous support and meeting it as resistance at 10 cents. Now, as I've said, coming back for some sort of higher low or coming back to fill this wick here is a high possibility. Again, as I was saying, wicks do tend to get filled. So we had this wick back here in April, and that eventually got filled down the line in July. Now we had this wick here in July that eventually got filled later on in July also. We've now got this wick here in August. Is this wick potentially going to get filled somewhere along the lines in August? Now, this is where I would expect some sort of higher low. And as I've said, if we can get back above this wick level of resistance, okay, because we have this wick right here we need to get above for VANRY at 0.09. If we get back above that, I expect relief up to these previous candle closes, previous support, meet at a resistance at 10 cents, and then come back for a higher low and potentially fill this wick in. Because what we want to see is some sort of base foundation form here, right? Underneath this level of resistance, we want to see some sort of base where we can form a base and then look for the breakout. You don't just want to go vertical like we did here. You don't just want to from this week just break out, because you will just come crashing down just as fast. We want to see some sort of formational base, double bottom, higher lows over time, very similarly to here. We had higher lows over time and then go for the break. So I think right now 10 cents is a key level of resistance to get back above in order to start retracing to these targets of previous highs that were met as resistance, right? Because you lose the support, you run into these lower highs. These highs that were lower highs along the way down will now act as resistance levels on the way back up. So these are the key targets we need to sort of start working our way back above in order to get back to these local all-time highs. So if we break the 10 cents, you've got 14 cents above, 22 cents, and then 31 cents, all to get back above in order to see retracement to this all-time high. But the reason why I think right now we are lowballing out, and this sort of range, if we can hover around here for a few weeks, and as I've said, build up some sort of structure over time, if we can do that, then I think what we've had is just a 5-wave correction from this high. We've had 5 waves, 1, 2, 3, 4, 5 waves down, 5-wave correction, build up some sort of base on this key demand zone / support zone that was previously resistance. We've now back tested it as support, build this base, start breaking out of resistance and getting back above first 10 cents. If we see that get broken out over the couple of weeks into the next month or two, we've got 14 cents above, 22 cents and 31 cents to start working our way back towards. Now there are 2 levels of key resistance and support that I want to look at equally, so I'm going to remove everything off the chart. We could have created this ascending level of support for ourselves now, which we could see potentially retested in the future equally. So we've got these contacts of support along this trend line here, and right now we've come back to these this trend line once again as of last week and this week. If we can sort of hover up along and build higher lows here along this ascending support line, just like we did here, if we could just sort of hover around here for a few weeks and then go for the break, fantastic. And this is where I'm saying we could potentially see this higher low sort of formation under 10 cents build up along this ascending support and then go for this descending resistance breakout. So we've got this ascending support and we've equally got this descending resistance from this all-time high back down to these lows. So if we can start getting back above 10 cents eventually, it would also have to start breaking above this descending resistance in order to start going back to those highs that I had on earlier at 14, 22 and 31 cents. So key things to take away. I think we are going to start having some relief over a couple of weeks, but pull back as long as we can hold support on this ascending trend line and sort of hold this wick low over the next coming weeks. Even if we do lose ascending support and just build some base, fantastic. I do think we are generally just range bound right now, looking for some sort of higher levels of support for continuation to previous targets we have fallen from. So I hope you've enjoyed the content today, guys. From Chart Nerd TA, take care, peace out.